Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Stillwater Critical Minerals Corp, a mineral exploration company focused on nickel, copper, cobalt, gold, and platinum group elements. Please note, you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Michael Rowley, President, CEO, and Director of Stillwater Critical Minerals Corp., which trades on the OTCQB venture market under the symbol PGEZF and on the TSXV under the symbol PGE. Welcome, Michael.
Thank you. Glad to be here and glad to present our continued ongoing success as we advance the next phase of critical mineral supply from a truly iconic American district. The future of critical mineral supply is the theme of today's presentation. I look forward to expanding upon that. That was indeed a forward-looking statement, and I expect I will be making additional forward-looking statements. The vision here is to secure critical mineral supply from the U.S. To become a primary U.S.-based source of low-carbon battery, catalytic, and precious metals. Really, everything that's essential about this slide is presented in that shaded box there. If you're looking for a district, even in North America, certainly within the U.S., with truly global scale and grade of mineralization in an active and expanding mining jurisdiction, we're on a very, very short list. And that's a key point, a key takeaway as we advance this asset in the U.S. I'll be touching on that more in subsequent slides. That vision was recently validated by the investment by Glencore announced just over a month ago. They invested $4.9 million at a healthy premium to market, 52% above market price, and that's driving the drill program that we now have underway and the expansion, the work that we're doing. They've been excellent partners, I have to say. We've really enjoyed working with them. They seem to be pleased with everything we're doing. This is a big stamp of validation to our work. This is also obviously funding at a time when junior exploration growth stage companies, many are struggling. And this also builds in a further $5.2 million with that warrant financing that you see described here. So with any success of the drill and in a market, there's an additional $5 million built in there, plus other warrants that we'll discuss at the market slide coming up. Of course, with any growth stage company, the asset is critical. So is the team. And very pleased to present the board and senior technical team, which is truly world-class. And I know many CEOs say that, but really, I think the deep dive here would show that's the case. Myself, I'm the founder of the company. Greg Johnson at top right there, co-founder of Nova Gold, saw that from 10 cents a share to 2 billion in market cap. And that's the playbook we're following here. It's that Nova Gold playbook, a district scale acquisition during the bear market when good assets are available inexpensively, and then build it out into a better market. How do you build it out? You build a great team. Danny Grobler, Albie Britz, the next two names on the list there, they joined us from Ivanhoe about 14 months ago. So Ivanhoe's former chief geologist is now our vice president exploration. They're 20 years of experience each in the Bushveld complex, South Africa, with the giant mines over there. Very relevant to what we're doing in Montana. I think you'll see that in the subsequent slides here. And that's why we're so pleased to have them. We're now drilling our first drill campaign under their guidance and incorporating their geologic models, and that's very significant here. The next two names, Mike Austenson, Justin Madru, have both worked in the Stillwater district for 20 years each. So there's a great depth of experience there as we bring these giant mine models to Montana. I'll call out Nora Pincus as well. She just joined the board yesterday. Very pleased to bring her in. She has a terrific depth in law and mine finance, and she's also a Montana native. So she knows the state very well. All in all, terrific depth there. The website version of the deck goes on to describe the advisory boards. I'm skipping over that here, but there's even more depth there. The technical team, industry partners, very relevant. The USGS we've been partnered with for 7 years here. They've been studying the Stillwater complex for decades, and they're a gateway to a lot of that government funding that's only come available in the past few years. The middle two boxes, UBC, ARCA, and Cornell, this is all about carbon sequestration. Won't go into that too much in this presentation, but we have the right rocks to naturally bind carbon dioxide, and we're looking at putting that away in potential tailings as part of 45Q tax credits. The work under a DOE grant with Cornell is looking at more active ways to sequester carbon. So direct capture and then put that carbonate mix into tailings somehow. Goldspot, you may have heard of. They use AI basically to increase our effectiveness of the drill. And Glencore are on the technical committee and have been wonderful partners. Terrific depth there. Our portfolio strategy, we've been acquiring district scale projects since the last bear market. So we're well positioned with 3 district scale projects, 100% earn-ins, all complete. We own these assets 100%. That distinguishes us from a lot of our peers. Focus very much on Stillwater. That's where the 1.6 billion pound resource is. That's where the drills are turning now. We have a good earn-in deal in place on the Black Lake Drayton project in Ontario. I invite you to look at Heritage Mining for details on that. That gives us good exposure to the gold space, and we're very pleased with that. The Kluane project in the Yukon, earlier stage, large land position, good district, and critical minerals. Everything from here on out is going to focus on that Stillwater project. These are very much in demand as critical minerals. We have now 9 that have been listed in the US as being critical, and the government is looking to secure supplies of these. Led by nickel, which as you'll see is our greatest value, 46% of our resources. There are stats out there that we need 72 nickel mines of the average current nickel mine size. Nickel's an interesting one because it, more than other commodities, has been starved out in terms of exploration. There are very few nickel projects in the development pipeline, which makes us further relevant, especially given our US address. Copper recently added critical, and then we have a lot of that. Cobalt as well. The PGEs the district is currently known for, we have those. And gold as well, actually, as a backstory. Chromium is not yet included in our financials, in our equivalency calculations. District is also known for chromium, and we do have that, and look forward to bringing that value in as well down the road. This is driven by deglobalization, frankly, and we're being approached by, for example, automakers looking to secure metal supplies within North America. This is unprecedented for Mercedes-Benz, Hyundai, Ford, GM, others, to be reaching out to pre-production stories, but it shows the concerns they have about tying up supply within geographic boundaries, so within North America in our case. There are real environmental and humanitarian concerns with the current supply, especially cobalt from Congo and nickel from Indonesia, New Caledonia, and these much dirtier laterite ore types that have orders of magnitude higher carbon footprint to produce a clean nickel product. Of course, the majority of that supply is controlled by China as well, which is a further wrinkle and a further, well, it actually drives the third bullet point here. It drives the national security piece of the equation here, where countries are now looking to secure supply and be certain they have supply within their borders. All that brings us to the point, it's better to mine responsibly in the first world standards, and I would add from sulfide sources as well, because sulfides bring lower environmental footprint on processing. There's our resource estimates. This was just updated earlier this year. We did really only an 11-hole drill program, 5,200 odd meters, to get that 62% increase. That shows how well mineralized this district is and how easily we can add ounces and pounds of mineralization. In the base case at the top there's the 1.6 billion pounds nickel, copper, cobalt figure, the 3.8 million ounces PGEs and gold, with good sulfur levels of 1.13%. The high grade component at the bottom there, 11.6 million tons at over 1% nickel equivalent. That really caught the market's attention. We increased the cutoff grade from 0.5 to 0.7% on that model and still got that robust inventory that you see there and at high grades. So unlike many projects, we have good optionality on mine model here. We can go selective underground with that high grade component. We can go big bulk mineable. We're open to discussion on that. Currently, the drill is turning and focused on expanding that high grade portion. We're 2/3 battery metals by value, and I think that point is still working its way out there in our messaging. The district, as you'll see, is known for high grade palladium platinum production. So we're having to sort of shift the narrative here and focus on that 46% nickel that's shown here, 20% palladium in spot number 2. All in all, a true polymetallic project, and that we're quite happy with that, as is Glencore. We see it as being internally hedged and bringing good opportunity for value. Here's how we compare with the other U.S. Nickel producers. The U.S. has one nickel mine producing, the Eagle Mine, run by Lundin Mining in Michigan. It's a lovely high-grade underground operation, but it's small and it's set to close in a matter of a couple of years. When it closes, it will have produced about 440 million pounds in total. Produces about 40 million pounds of nickel per year. It's about 1/12 of what the U.S. currently consumes. The U.S. consumes about 480 million pounds per year. This mine is making 1/12 of that demand. That mine is proposed to be replaced by by Talon Metals' Tamarack project, another project we like, but again, not big. And if you add these two up, you get that sort of, what is it, just over 900 million pounds, almost 1 billion pounds of nickel. We have that in our base case, without even really trying in terms of drilling. And that's the point of the graphs you see here, that base case on the right-hand side, stacked up in nickel equivalent terms. We're bigger than these two already. In our high-grade case at the far left, we're already rivaling them. And as you'll see in subsequent slides, we've got a lot of room to grow. And then there's the point that we're not in Minnesota. Montana is actively expanding its mines. The mines beside us are expanding. Minnesota continues to struggle with moratoriums and such. So where are we in the growth curve of a mining venture? This is an interesting graph. You may have seen it elsewhere. It's fundamental to understanding investment in the mining space. On the vertical graph, you've got value, and on the horizontal graph, you've got time. And then the line in between shows the growth in value of a mining venture. There's basically a speculative curve that rises nicely, and then value may fall back again as you enter this sort of no man's land of mine building and permitting and less exciting work, if you will. We put ourselves as being well on the left side there. We've got our second resource out. We see lots of room to grow it. We also see the broader market improving as well, so this whole curve can swell as we get out of the rather bearish times that we're in and into a better time for resource stocks. From there, build it out and ultimately, most likely, see it into bigger hands and building a mine. Montana is very pro-resource and in fact has a terrific history of copper mining in particular, also critical minerals, chrome, and PGEs. We're down in the south of the state, as shown there, sharing a district with Sibanye Stillwater. Lots of oil and gas to the east of the state and some really big oil refineries that are potential point sources for us in terms of CO2 that we could put into the ground in the rocks at Stillwater. Majors are active in the state. You see Ivanhoe and Rio here. And Rio's doing a large survey with the USGS and some government money. All this shows that the state, in fact, is pro-resource and is a good place for critical mineral supply. Let's take a closer look at the Stillwater complex. It's been producing critical minerals since long before they were critical, starting actually on our ground with high-grade nickel and copper production. That moves to high-grade chrome production during the war years. And this picture you see was actually taken by me from a helicopter last week. You can see a bit of the rotor and the cage. I was trying to capture the historic chrome mine that you see on the left hand of the picture, and then the active current Stillwater mine in the far of the picture. This says it better than I can say it in words. The government has subsidized critical mineral production here historically, chrome mining from that historic Mountain View operation. And then starting in '86, we see the production of high-grade palladium platinum, now listed as critical. Our core shack is just down the street from this. We share all that geology, as you'll see in an upcoming slide. We debuted our inaugural resource in 2021. We expanded that in 2023. Our model brings a much larger scale of mining. These guys are mining underground selective mining on a 1.8 meter wide deposit. Our project would bring economies of scale and bulk mining and lots more nickel and copper and cobalt to the district. There's a look at the Stillwater complex. Our claims are in yellow, Sibanye-Stillwater's are in gray. The deposit that they're mining is that purple line cutting across the screen, the JM Reef deposit, over 100 million ounces of the highest grade palladium platinum in the world in nickel and copper sulfide. So they are currently producing a nickel sulfate product at their refinery in Columbus, along with significant palladium, platinum, and other metals. We're very fortunate to be there. The point of this slide is the size of the system. It's 40 kilometers by 8 on surface. It's one of the absolute biggest in the world. It's a lot like the Bushveld complex of South Africa, hence the importance of the Ivanhoe geologists that we added. And in that stack column at the left, you see that the narrow reef deposits, such as the one our neighbor is currently mining, occur in the upper portions of these, in the greens. We're in the correct place for the Platte Reef style deposits. Those bigger magmatic events have stepped in and made these larger deposits. To give you an example of what those are like, we'll go to South Africa and the Platte Reef district. This is in the lower part of the Bushveld complex now. Again, our parallel here for Montana. And you see Ivanhoe's Platte Reef deposit, 8 billion pounds nickel copper, 95 million ounces PGEs. And right next door to that, Mahalaquena, been running by Anglo-American since 1993, 15 billion pounds nickel copper, 152 million ounces, monster deposits. This is what we're chasing in Montana, and this is consistent with our existing resources. Those resources are actually 5 deposits set across 12-kilometer core of the property. So already you're seeing expansion potential because they clearly want to connect. In the lower part of the image here, in the pinks and the blues, you've got a geophysical survey, an induced polarization survey that we ran in 2021, 2022. Nestled in that are the yellow deposit bodies. So they only look small because of the scale of this image. We're talking about 12 kilometers here. Above that, you've got metals in soils. And as you can see, there's a strong correlation here between the shapes in the 2 layers. And this is what we want to see as we look to expand the project. Very high levels of nickel and copper in soil, large, the hottest is pink here, and many of them are untested by a drill. So we are currently drilling at the Chrome Mountain area, and very happy with what we see. And we will look to expand those resources with news releases over the coming weeks and months. More broadly across the property, that Ivanhoe deposit that you saw, the 8 billion pounds, 95 million ounces, that covers about 4 kilometers. This image is looking at the 25 kilometers of the main claim block, and it's presenting electromagnetic survey results, purple being the most conductive areas, generally indicative of mineralization. You can see that we have multiples of that 4-kilometer scale length. So it's a very forward-looking statement, but the pitch is essentially that we were fortunate to be able to tie up a 100% interest on the lower Stillwater complex during the bear market and then advance this giant South African mine model for critical minerals in the US. This really looks like it could be a multiple of our current resources and even a multiple of what Ivanhoe has in South Africa. ultimately. So let's get even more hyperbolic. This image is what's known as a magnetic vector inversion. It's looking deep into the rocks on geophysical data, 7 kilometers down, in fact, and you're seeing 22 kilometers in strike. The earlier image of the pinks and the blues is up there under the Chrome Mountain and Iron Mountain tags. And again, they only look small because of the scale here. The Chrome Mountain deposit areas that we're now drilling at are shown in yellow just below the word Chrome Mountain. What's exciting to us is that word feeder down below Chrome Mountain. Everything we're seeing in the geology and in images such as this is suggesting to us that there may be a deep-rooted feeder structure there to the entire complex. That's very exciting geologically, and if in these large magmatic systems, that means grade and scale. This is the conduit that would have driven the layers that were laid down, and that's something that we're going to focus on moving forward. So that's us in a nutshell. We made the acquisition in 2017. We've drilled 4 campaigns. We've debuted 2 resources. We're into our 3rd expansion now. We brought in the Ivanhoe guys. We brought in Glencore, and we're working hard to generate news here on exploration results and also some other surprises that we're working on. Look at the market. We're currently sitting at about a 34 million market cap. Share price has done what many of our peers in the broader markets have done. Last year, it was a flight to the US dollar. This year, it's still a risk-off sentiment. We get the impression that a lot of folks are waiting and anticipating when the point is to jump into the growth stage stocks such as ours. We're buying now, and we feel the best thing to do right now is to be on the bid and be accumulating. This will at some point correct and move up. The fundamentals have never been stronger, in my opinion, and we're looking forward to that point. In the meantime, we're going to continue to do good work and get good news out. Shareholder composition, excellent holdings by management, people close to us, high net worth, institutions driven by Glencore in that 9.9% investment in June. Also, US Global is a major institutional holder. And final point on this slide is that we have warrants priced at 25 cents Canadian and 30 cents Canadian, about $8 million total Canadian there. So our strategy for the next 6 months and a year is to get news flow out and drive that price higher. And based on what we see at the Core Shack, I think we can do that. Bring that money in, trigger Glencore's warrants at 37.5 cents. There's a total of $13 million available to us there, which we could do a lot with in the ground. I think that's a wrap for my coverage of the deck. I'm happy to look at any questions. Stephen has asked, is Sibanye Stillwater likely to be investing in the company, or would they be willing to let you use their refining facilities? That's a really good question. Sibanye is a producer. They were born as a producer about 10 years ago. They're not explorers. I know they're interested, and they are actually making battery metal acquisitions around the world. So that adds up well. Glencore obviously moves more quickly writing checks, frankly, and we were pleased to bring a second global major to the district. What happens from here? We got to continue to de-risk this and grow it to the potential we see. I wouldn't rule out either one. I also wouldn't rule out Glencore working with Sibanye or even possibly purchasing Sibanye. None of that's impossible at this point. What we're looking at looks truly global in size. So it's just a matter for us of doing the good work to grow this out and prove it to the potential that we see it reaching. Question from David. Operating in Montana, are there any U.S. government resources that you can access via the IRA? We are indeed accessing funds from there currently through the USGS, and we have a number of proposals in with them for additional work on the more technical side. The bottleneck there, frankly, is the bodies to vet the proposals. Thankfully, Montana has a good history in mining. The states are typically looking to state bodies to do the vetting. So the Montana Bureau of Mines, University of Montana, these sort of institutions. They're adding people. We have a number of proposals in, and I'm looking forward to announcing success there at some point. I think it's months away, frankly. At the federal level, we're talking to both the DOE and the DOD. We already have that RPE grant in place, and we're looking at more of those. We're also looking at some bigger ideas as well. The IRA opened up a fire hose of money, in the words of the Globe and Mail, and Canada, EU, other countries scrambled to keep up. It's basically a heavy subsidy of U.S. mining, and we're not upset about that. How long was Glencore's due diligence before they took a stake? From Adrian. It wasn't that long, actually. They were one of the later parties to the table. We have multiple parties in the data room, all miners. And yeah, they were quick, relatively. Your presentation talks about a relationship with Cornell. Can you expand on that and what it might mean? Yeah, we're very pleased to bring Wolfgang Meyer, global expert in these layered magmatic systems in. That was one of Danny Grobler's connections. He's the ex-Ivanhoe chief geologist. When he got to Montana last year, he invited Wolfgang. Wolfgang came through for a week. We're pleased to have him again this year. That's the Cornell connection, and that greatly speeds our progress, frankly, to have these expert eyes upon the rock. And the drilling that we're doing right now is driven partly by that, and we're excited to report those results. Jose asks, can you discuss your capital position as it related to your 2023 drill programs and resource estimates? Well, we've got up to 6 million cash and cash equivalents in the bank. As I mentioned, we'd love to trigger those warrants. We're not assuming they're in, though, this month or next, frankly, given that markets are still remarkably disconnected from reality. The best way to answer that question, I think, is to note that we added that 62% expansion to our resources, 90-something million tons of ore, with only 5,138 meters, 5,138 meters of drilling in 2021. So this is a big and well mineralized district, and we can add a lot, even with the tight programs that the market is dictating right now. And that's our focus, particular focus on that high grade, and I think we're doing that very nicely. Can you speculate on timing of first drill results? From Chris. We're rushing assays on key portions, so I'm optimistic that those are coming. I don't think it's going to be multiple months. I would hope more for multiple weeks. We're doing our best on that. Adrian asks, how many meters in the current drill program and when is it scheduled to be completed? We basically drill until it gets less economic to do so, which for us is typically early October. So we targeted 5,000 meters in this program, and if we secure additional funding, we'll gladly expand that. Frankly, at the current price, I don't see that happening. So we're focused on some really good holes that we can do with that 5,000 meters. And I actually had a slide here of some core laid out in the sun, but it didn't make it through to the deck. You'll see it in social media and other channels. We're very excited by what we're seeing in this year's core, put it that way. The stratigraphic model that Danny and Albie worked up over winter is a thing of beauty, and drilling to that has just been a pleasure. Oh, and actually Chris corrected his question that it wasn't Cornell University, it's actually Cardiff. Cornell is a different grant that we're under. Wolfgang is at Cardiff. Little bit more about carbon sequestration. Oh, well, actually key infrastructure. Let's talk about that just quick with the minute we have left. Good question from Jim. Yeah, with mines right next door, the infrastructure is excellent. In fact, Savanier is mining about 2 kilometers from us underground. So in theory, they could just punch through from that East Boulder mine of theirs and get our biggest deposit, Chrome Mountain area, just like that, which is a further reason to work with them ultimately in commercializing this. Big picture, they have a good neighbor agreement in place that's excellent with local communities. Power infrastructure, you can drive up to our drill rig right now. You'd need a 4x4, but it's all there. It's past producing ground, and we're glad to be there. I've got about 15 seconds left on the clock, so I'm going to buzz to the last slide here with the contact information, and please do follow up anytime you have our contact here.